First of all, I'd just like to welcome everyone to this webinar. As crypto, digital, asset and fintech regulatory frameworks develop in Asia, what impact is that having on compliance and corporate governance hiring? We're very lucky today to have two great speakers joining us. We have Anu Fansa from Chief Compliance Officer and MLRO for Coinbase, and Donald Day, the Chief Operating Officer at Victory FinTech Company, ex-Securities and Futures Commission from Hong Kong. The format of today is that we will just be, as I say, kicking off now. I'm just going to give a brief introduction on the Danos group, and then we'll start introducing the speakers. If everyone could keep themselves on mute during this, there is a chat box. Please do ask any questions through the chat box. After the two speakers have given their thoughts on this topic, we will be opening that up to questions. We've already had a few questions come through from people, so we'll be starting off with those, but anyone who's got any questions, so please add them into that chat box. The Danos Group, as I'm sure most of you are aware, was established back in 2004. We're a specialist recruitment firm with three arms of retained search, permanent contingency hiring, and temporary and interim staffing. We provide that across our areas of compliance, financial crime, legal, risk, and ESG, and across 5 locations of Hong Kong, Singapore, UK, Europe, and the US. Myself, Mark Morby, I head up our business in Asia Pacific, looking after our teams in Hong Kong and Singapore. And also on the webinar today, we have Serene Tan, our associate partner, who leads our Singapore compliance team, and Michelle Yao, who leads the team on the ground in Hong Kong. So without further ado, I'm going to pass over to Serene in Singapore to introduce our first speaker.
Thanks, Mark. Hi, everyone. I'm actually very pleased to have Anu here with us today. She's someone who's highly passionate about using technology to solve problems and, has almost 20 years of working experience within the FS industry, mainly across fintech and also capital markets. And she also has a wealth of experience in working on several license applications, and most recently on the DPT license with MAS. I'll right now let Anu to introduce herself further and to basically share her views. Over to you, Anu.
Thanks, Serene. Thanks for the wonderful introduction. So, yeah, basically, in terms of my journey into the crypto world, I will just say that it was basically just happened by chance. So I was with Revolut previously, and as you might know, it's the largest fintech in Europe, valued at almost 33 billion. We offered a lot of products, and crypto was one of the products that we offered. But when I was first introduced to the world of crypto, it was super fascinating for me. And when this role with Coinbase came along, I said, wow, what a great opportunity to kind of specialize in this area, which is quite new. So it's very challenging in terms of regulations, because I've joined as the Singapore Chief Compliance Officer and MLRO. The regulations are still evolving in this area, and there is so much to learn. So I consider myself a student for life. So that is what keeps me going in terms of, all the curiosity. So yeah, I was super thrilled to kind of jump at the opportunity and get into the fascinating world of crypto.
Just run us through that and give us your views on, the changing regulations within the crypto industry, and how do you think it will potentially impact the hiring industry, and how do you think it would then, and what do you think would be the best way for us to actually attract talent within this area and also to retain them?
Yeah, sure. That's a great question. Before I start answering any questions, just the standard disclaimer that anything I say on this webinar are my personal views, so they are not views of Coinbase. In terms of your question, I think that's a great question, Serene. As I said, this is a relatively new industry, so it's not easy to find talent as you would in banking, because it's been there for years, and you would have experienced compliance officers at all levels. So hiring and building a team for someone in my role is always a challenge, because you don't have people, because the oldest exchanges, the maximum experience you would have in a person, even if they started at the very early days of crypto, would be probably 8 or 9 years. So it's not easy to build a team and find the right talent. Also, let's not forget there is a lot of demand for crypto compliance professionals. So there's always growing demand at various levels. So it is a challenge. But fortunately, I think the stance that crypto companies are taking is that they're willing to kind of bet on potential of candidates rather than existing experience. So, like I said, curiosity is very, very important when you're applying for a role in a fintech company, because you may not know everything, you may not know 100%, but as long as you have the willingness to learn, willingness to upgrade yourself, do relevant courses and upgrade your skills, that's something that, you know, all hiring managers are really looking for. And that is what, you know, can get candidates roles in industries, fintech industries, including crypto.
Thanks a lot, Anu. I will now pass over to Michelle from the Hong Kong team to introduce our next speaker.
Thanks.
Thank you, Anu, and thank you, Serene. It's with special excitement that I'm pleased to welcome our second speaker, Mr. Donald Day, to our webinar. Donald is the CCO of a fintech startup in Hong Kong, Victory FinTech. He helps to build a digital asset ecosystem for the institutional investors. He previously was the in-house crypto expert at the SFC, the Hong Kong regulator, where he co-authored the licensing regime for the virtual asset trading platforms, designed and led the supervision of the virtual asset fund manager and trading platforms. Donald has over 20 years of working experience within the financial services industry, mainly across hedge funds, brokerage house, and banking. So I ask that you give your full attention to Don and help me in welcoming him. So over to you, Don.
Thank you very much, Michelle. Fantastic introduction. Thanks for all of you being on this call and spending the time with us. Just a slight change, a slight correction. I'm the COO rather than the CCO. Indeed, before that, I was at the SFC. I helped define how to approach potential regulation and how to deal with applications, both for fund managers and for trading platforms. And I ran the team that then was supervising the fund managers and the eventual trading platform as well. I also did a lot of internal and external training to regulators in Hong Kong and globally. So rather than run through my background, I wanted to share just a few inflection points. One of them is indeed how I got into crypto, which is in a way quite similar to Anu, more by chance. So I'd been working at a hedge fund as an index arb trader. I sat next to the convertible bonds trader for a while. He went to the US to do something else. I left to do something else. And then we caught up 2 or 3 years later. And I had sort of like watched crypto, but I felt I had missed it. I felt it was mostly for laundering, illicitly gained money, drug dealing. And then he came back and he said, I'm going to start a crypto fund. And I thought, well, okay, he's a very, very well-known person. He's very good at what he does. If he stakes his professional career on this, I should look at it again. Obviously, I still felt I had missed crypto because guess what? Bitcoin had just broken $1,000 US. So obviously I had missed the main part of the crypto boom, clearly. So we co-founded this institutional grade, one of the first institutional grade crypto hedge funds. We got licensed in Jersey. I ran systematic trading. Our timing wasn't great. We were both too late and too early, but the setup was excellent. And then as I moved to the regulator, I still find that what the setup was back then was great. I didn't earn a salary for a year, so financially it was a disaster, but I gained a lot of valuable and unique experiences. And just to elaborate on why I moved to the regulator, because it isn't really a clear move to go from front office as a trader to the regulator. But what I realized through many, many different experiences was that if this asset class was to, in a way, make it, attain institutional money, get professional asset managers and professional financial services firms, what it really desperately needed was regulatory clarity. Because regulatory clarity then brings in different people, different firms, and different products and services. All are needed for institutionals who need fund administrators, custodians, brokerages, people who understand how important middle and back office reconciliation at the end of the days, and so on and so forth. And a lot of the experiences I had at the fund were interfacing with counterparties that weren't as professional as, for example, Coinbase was. It created a lot of tension, and that was one of the reasons why I felt being at a regulator and playing a part in an international effort to regulate that would be quite valuable.
Thanks, Don. And how do you think that would impact, like you said, that there obviously need development in the regulatory space in the crypto area, and how do you think that would also help linking in hiring and training requirements when you hire for your staff?
Yeah, great question. So I mean, the industry has been around for quite a while now, 10 years, and there's clearly a shift. So initially, and to a degree still, there are people out there who don't necessarily have the relevant background and experience, to put it mildly and friendly, but they talk a big game. So real experts are still hard to come by. But what happened is more and more regulators around the world, especially driven by the US, of course, but also Switzerland, continental Europe, FCA in the UK, and obviously Hong Kong, Singapore, Korea, Japan, as more and more regulators realized this asset class is here to stay. It's not going to disappear. It's here to stay. And we need to do something, because not doing anything is not an option. That then made the asset class credible in the eyes of a lot of people. And what you see now is more and more seasoned professionals entering this space. And by seasoned professionals, I refer to people who have a lot of technology experience, but technology experience, for example, at investment banks or at large funds where they've built training systems, where they might have built risk management systems, compliance systems. You also see people with a strong legal background, people with a strong compliance background, and obviously also people with a strong sales and trading background in traditional asset classes that have a lot of experience in working in and interacting in a regulated environment, entering this asset class. And that leads to increased professionalization, institutionalization. You have very different conversations with these kind of people, and that only helps. So if you ask me how that leads into hiring, I think it's important to have people who understand what it means to be in an institutional business, to be professionally managing money or taking care and taking responsibility for client assets and the safety of that. And then it's obviously an exciting and a quite hot market, if you will. So I think it all depends on what people bring to the table. And Anu mentioned training, though that's important. Specialized knowledge in a certain area would be important. Being aware of what happens in the market, for example, would be important. If you come with experience, then sell the experience you bring to the table to help startup firms reach the next level. And if it's a young graduate or someone with a few years of work experience, then inform yourself, get the specialized knowledge, show interest, because it's still a very young market. So there's still a ton of opportunities out there.
Thanks, Don. I think that it was very informative in terms of the corporate and governance teams, for them to meet the future regulatory requirements. How do you see that that you will have to equip, or what are your future plans in order to further equip for your corporate and governance team?
Sure, you see me smile because I've obviously just changed sides, and I was wearing a hat for 3 years and now I'm wearing a different hat. So let me start with maybe an approach not to take. So some applicants came into conversations with a regulator in a fairly, let's say, confident manner, with an attitude of the regulator doesn't know a thing, let us explain to the regulators how to do things. They're incredibly smart people at the regulator. B, if the regulator asks a question, they don't really show that they don't know something. They're just checking whether the applicant knows it and to the level that they expect. And 3, I think respect is a really important part, and it's strange that I have to point this out, but again, it comes from experience of 3 years. So I think the people engaging with a regulator who have previous experience of engaging with a regulator, because they might have been in a licensed financial services company, whether that's an investment bank, a fund, a service provider, a research house, a brokerage house, they already know how to interact with the regulator. And at the end of the day, the regulator always seems to be a black box, but it's in the end of the day, it's human beings. So to just show and instill confidence in the ability of your team to take care of investors' assets, to be very proactive and leading edge when it comes to topics like AML and KYC, when it comes to for trading platform market surveillance, if the licensing application is related to different field in financial services, just to make sure that it's not only that all the boxes are ticked, but it's also that the team has a deep understanding of what it is that they need to do. And they're also able to engage in a conversation. I'll give you one example. One applicant came in and showcased their market surveillance system. Fantastic. They talked about how they had worked with a provider and took the alerts and signals from the provider. And then some of my former colleagues asked, well, who in your company has been trained on this product and who's going to use it? And the answer was silence. So that wasn't a good example. Another applicant, for example, came in and very quickly showed that they weren't very well equipped in the topic of credit risk management, which is a key topic for anyone engaged in financial services. They came back a month later. They had hired someone very credible, deep industry experience. This person had completely revamped everything, written policies, procedures, put committees in place, and they nailed it. So it's really about the approach. It's really about being professional, having an institutional mindset.
Yes, I think that's a very good point. Having different teams working together to achieve one goal. So like you said, the trade surveillance team shouldn't just be focusing on trade surveillance. They would have to understand what the business to know what that is for. I think that's a very humane approach to the regulators as well. I think we could move into the Q&A session. Mark?
Yeah, great. Let's move to some questions. We've already had a few questions coming through on the chat, and also I've had some that have come through on email. So the first question I have here, Anu, is for you. The MAS in Singapore has issued guidelines to discourage cryptocurrency trading by the general public earlier this year, and firms are discouraged to advertise for crypto. What do you think the intentions are behind the guideline and the impact on the market?
Yeah, sure. Thanks for that question. That's a great question. Actually, before I answer that question, I just want to compliment Don for calling crypto an asset class. Well done, Don, because that's the problem, that's the issue where there is, a lot of misconceptions around crypto, and still a lot of people believe that it's something that is only for bad actors. So that mind shift has to take place. Also, at the same time, as we have seen in the last few weeks, the volatility in crypto markets has been so high. So in terms of answering that question on the intent behind issuing these guidelines and talking about crypto not being suitable to retail investors, it's just a part of the concern that MAS has raised. But the bigger point they're trying to make is that do not fall for like big, shiny advertisements and just go and invest all your money in crypto, because you're also likely to lose it. So it's accompanied by, I know the advertising got a lot of airtime and a lot of media coverage, but what I can tell you is that on the side, MAS has also released some frequently asked questions, and they have updated the frequently asked questions where they have required additional disclosures, risk disclosures to be made when investing in crypto. So they have asked all the license firms to include all these risk disclosures. So it's no different from any capital markets product where there is, whether it's a structured product or any complex product which uses derivatives and structures. It's basically to align with those requirements to say that it is not suitable just on the face of it, but as long as you read the risk disclosures and you understand all the risks involved, and it is not all of your money, it's a proportion of your assets which you're willing to use, because it's high risk, high reward kind of asset class, right? So it's that is really the intention. Also, I would like to highlight that MAS has disallowed advertising only in public areas. So like, I think for us in Singapore, you might have seen some advertisements in malls and ATM setting up, and also in MRT stations. So these are the kind of advertisements which have been banned, but you could still promote your products on your website, on your company social media account like LinkedIn, Twitter, and you could still have you could still have like customers coming to you asking questions. So you could still kind of promote your products in that sense, where it is not a mass advertising campaign, because it's the idea is that the customers really need to understand what they're getting into. They understand the risks, and after that it depends on how much of their assets they want to allocate to crypto, and they are also willing to take on that risk just in return for a higher reward.
Could I briefly add on to this, because it's a very, very interesting topic. When I started at the SFC, there were basically very, very high level, board level discussions on whether the Hong Kong regulator could or indeed should regulate this asset class. And there wasn't a clear decision. And subsequently, when releasing the framework, the obligation in Hong Kong is obviously that only professional investors, i.e. $1 million and upwards, are allowed to be onboarded for funds and especially trading platforms. And Hong Kong took a lot of flack for this decision. Singapore was always seen as more crypto friendly, more crypto open. And the decision was exactly, or the reason for the decision was exactly like Anno said. It isn't so much the volatility, because volatility is a function of a market and an asset class. And I can show you stocks on secondary markets that show a very similar volatility exposure as cryptocurrencies do. But it is the amount of fraud, of market abuse, front running of client orders, wash trading and so on, that at least at that time in the market was prevalent. So the regulator felt, well, this is a completely new asset class. It's highly technical. Most people engaging and trading in the market do not actually understand to a deep degree of what it actually is that they're trading. So they felt they needed to protect the retail investor from these shiny advertising that says, oh, Bitcoin went up 30%, why aren't you in this? You should participate. And the intention is obviously not to prevent a knowledgeable, young, experienced trader who has the knowledge, but it's really to protect people putting their livelihood into an asset class, to protect pensioners, retirees, to put their life savings into this.
Yeah, absolutely. I absolutely agree. In fact, Dawn, I was the statement that you made on the volatility being quite similar. So I was looking at the Bitcoin price movement in last 6 months and NASDAQ index, and the charts look quite similar. So that's really the similarity. Yeah.
Indeed.
Don, you mentioned there, obviously, I guess some of the similarities and some of the differences in approach between Hong Kong and Singapore and the regulation there. Neville Diffie has asked a question here about how you think that the national regulators are going to come together to produce greater international consistency with regulations still evolving and a challenge for everyone advising in this space. Does it put a premium on understanding regulatory drivers and objectives? What are your thoughts?
Of course, I'm obligated to say yes, it does. Especially with the compliance audience we have here today. Oh, how much time do we have today? I hope we have a couple more hours. So in a nutshell, there are a lot of regulators around the world thinking very deeply on this. I said I met a lot. There were regular working group meetings. I sat in a working group for DeFi, and I was absolutely stunned how deep people at various regulators in the Americas and Europe mostly had thought about whether, or if so, how DeFi could be regulated. The challenge, obviously, is that a lot of the legal framework that govern how a regulator can operate are very national or geographically bound, because a regulator who regulates the Canadian Stock Exchange or the New York Stock Exchange or the LSE does exactly that. They regulated the LSE. And if they come across, while an investigation is ongoing, that a licensed entity might have engaged in a certain behavior, who's also licensed in another jurisdiction, they might contact that regulator and say, this is what we found, up to you if you want to take this further or not. But the legal frameworks aren't really set up to deal with a global asset class that trades 24/7 globally around the world. And when I started, I did quite a lot of internal workshops where I had to highlight, it doesn't really matter whether you say you cannot do this to someone in the market, because they might just go to another country and do it there. They might go to the cloud. You can't really say where a certain server is or where a certain asset is, because it's running on a couple thousand validation nodes in a cloud mostly. So first of all, they need to have this understanding, but second, they do. The second part is that the legal framework, which obviously is very, very slow to change, is very slow to change the underlying legal framework. So the problem then becomes one of regulatory arbitrage, where people move their headquarters to the jurisdiction of choice or the flavor of the month, wherever it's seen as beneficial or weak enough that they can conduct their business without too much regulatory overhead. However, to close it off, I think, and I've held this opinion for many years, I think in the end, there will be maybe a dozen, don't name it down a number, a dozen licensed regulated platforms, such as Coinbase, for example. These are the ones that institutional asset managers, institutional counterparties can deal with, because they can only interact with regulated and licensed counterparties. That's where the money will go. That's where the price finding will happen. And there will always be weaker licensed or unlicensed platform, but I do believe they will go down in importance. They will go down in volumes, and they will go down in the importance they play for the industry.
Thanks for that, Donald. Anu, anything you'd like to, I guess, add from a Singapore side to that, and how you see kind of the MAS working more with international regulators as well?
Yeah, so in terms of the relativity of regulators, or the possibility of regulators coming together, we see some kind of collaboration at some level, because different markets are at different maturity really, and it's the individual risk appetite of the regulator, the supervisory body that regulates that country, and also in terms of, like I said, their own risk appetite, whether they want to open it up to just retail, or they want to open it up to accredited investors and institutional investors, or they don't want to open crypto at all. But absolutely, agree with Don that it's a DeFi system, so everybody has access. You can, even if your regulator doesn't allow it, you could still have a private wallet and pretty much do everything, through a private wallet, and trade and sell and everything, do everything with crypto. But there are some advantages of still pursuing, or still, being focused on jurisdictions which have a proper crypto licensing regime, especially from an institutional customers' point of view, because they prefer to have their money with an exchange which operates in a regulated jurisdiction, a properly regulated jurisdiction, because there are some exchanges which are kind of moving about, but it's not preferred by institutional investors. So it really depends. And it really depends on what kind of customers we are talking about. So retail customers, like I said, they can pretty much do everything and they have control over their own wallet. So they are not depending on an exchange. But yeah, it's kind of unlikely to be consistent across the globe. I don't think that's happening anytime soon. But just in terms of a comment on MAS and Singapore, in terms of MAS has always said that they want to be a crypto hub. But of course, the license application that you need to go through with MAS is very, very detailed. I've done that in my previous roles and gotten a DPT license previously. So I know it's very detailed evaluation. And the reason that they're doing this is that they just want few very good exchanges to operate in the country who can be completely relied on. They have a strong financial crime prevention framework. They have strong consumer protection standards. So they want to be a crypto hub, but they also want to be a respectable crypto hub. So I really appreciate that their evaluation process is very, very detailed.
Excellent. Great. Thanks very much for that, Anu. We had another question through which builds out something I also had on email as well. And I think we've touched on there that a lot of the regulation is focused on protecting retail investors. And we've talked about, obviously the accredited professional investors in Hong Kong only being able to access the market. But Don, if we start with you, what in your opinion do you think is the potential direction of regulation, and how do you think that's going to change over the next coming years, and what's that going to mean for accredited investors and for funds, as well as for the retail market?
Great. So obviously, I've left the regulator, and I wouldn't be able to talk about anything that isn't public knowledge. But I do have certain expectations. Just following up of something Anu just said. So, as in personal and professional life, also for an international financial center, it holds that you only have one reputation, right? And if you lose that, you get a second chance. So you really want to be a place where solid institutional level businesses thrive and the right actors are. You do not want to be known as the place where cowboy shops and fly-by-night shops operate. So this is one of the reasons why the licensing frameworks are very comprehensive, but they are no different than other licensing frameworks. So if you were to apply for a normal equity long short fund, or you were to apply for an automated trading system license, the due diligence of the regulator would be exactly the same. Some regulatory developments, well, there's multiple, right? And especially in the past 6 months have seen a lot of regulatory movement and a lot of more regulatory scrutiny and attention. One is obviously the travel rule coming from FATF, which basically in a very, very simplified manner means cryptocurrency transactions need to transfer similar beneficiary and sender information as with a fiat transaction over SWIFT, to make it very simple. And standards are evolving, industry groups are working on that, but it will further institutionalize this business. But from a more local Hong Kong perspective, I do believe that we should be seeing some more institutional level products being able to be offered. So as an example, for right now, you can't offer borrowing lending, you can't offer margin, you can't offer derivatives. Why? Because again, the regulator said, well, this is a very complex asset class. Let's take it step by step. We don't need to add the levels of a Delta 1 or higher Delta product onto already complex asset class, but other regulators allow it. So I think there's there will be genuine institutional demand for example, borrow lending as a bread and butter job for prime brokerage businesses. So I think as long as there's institutional demand, that will increase. And then also for the right retail investor, why shouldn't someone who has money, who is knowledgeable and know what they're doing, why shouldn't they be allowed to engage on a licensed and regulated platform and get access to the advantages that offers in terms of a regulated markets that keeps assets safe, that prevents market abuse and so on. And then globally, there's obviously a lot of scrutiny and attention to DeFi. There's increasing attention to stablecoin, obviously, mainly thanks to Terra Luna. So that will all continue. But it's difficult to see how that will work out. And there's also, on an IOSCO level, there's also at least the attempt to create something like a global body that would have a somewhat global mandate to regulate this asset class. But I talked to some of the former colleagues, and it's very difficult to see that to come to fruition in the coming 5 years.
Excellent. Great. Thanks for that, Donald. And I guess similarly to Anu, again, I don't expect you to have some privileged inside track that you're sharing here, but still, you know, the MAS announced just recently that they will be sharing their updated strategy on Singapore as a digital asset hub in August of this year, and that they have new rules that they could have proposed for September and October time. What do you expect to see in Singapore as they continue on this path to be a regional and global crypto hub?
Yeah, sure. So in terms of MAS focus, when the crypto regulation was initially introduced, they focused mainly on financial crime prevention. That was the focus area. They also said that they would like to have more regulations or more guidelines around consumer protection and interoperability in future. So the direction of MAS seems to be that because they are fully, they expect full travel rule compliance, 100% travel rule compliance. So in terms of financial crime prevention, they are kind of the gold standard in terms of what is expected from firms. So they've achieved that standard on financial crime prevention. So the focus, I think, is going to be more on consumer protection, especially because interoperability is not something that is, more for the consumers, it's more for the exchanges to work out between themselves. But in terms of the consumer protection aspect, that is what they'll be focusing on. We do not have a lot of detail on that yet, but it is possible that the guidelines which were issued earlier on advertising, they might fine tune the guidelines and apply it to certain investor groups in a different way, because that is what we've seen in the capital market space, where the requirements on retail investors, when you're dealing with retail investors, are a lot more onerous when compared to dealing with accredited investors and institutional investors. So perhaps, if they would like to align that to align crypto areas like DPT businesses to capital markets entities, that is a direction that they are probably likely to take.
Excellent. Thanks for that, Anu. And just one final question we had obviously everyone is aware of the crypto winter and the negative press that's kind of come around on that, on the crypto volatility. As Anu, you said, there's a lot of similarity in stock market prices as well. How has that kind of impacted hiring? Obviously, we know a lot of individuals in corporate governance related roles are naturally quite risk adverse. How has that impacted hiring? And I guess what would the message be as employers in this space to attract talent still into firms where obviously hiring in risk and compliance is still continuing?
Yeah, I believe the hiring in risk and compliance will still continue, maybe not at the levels that we saw last year, but the hiring will still continue, especially in compliance areas, because the regulations are still There is more regulation coming our way, so we definitely, kind of need to have the right kind of people and resources invested to comply with those regulations. But of course, overall, because of the crypto winter, there will be probably a bit of slowdown in other departments, and compliance is no exception to that. But there will still be hiring, I would imagine. Yeah.
And Donald, from your side, in terms of the attractiveness of people making that move from maybe an institution into the crypto world, do you think that's still there?
Yes, absolutely. So my opinion of what's currently or what's been happening in the past 6 months is that that's the best thing that could have happened to the asset class. Why? There were a lot of valuations that could never hold. There were a lot of people in the industry who weren't professional, didn't really know what they're talking about, but could say buy the dip, and looked like rock stars. And Warren Buffett has a very good saying. He says, when the water goes out, it shows who's been swimming naked. And that's what's happening now. It's unfortunate when people lose a lot of money, but it also shows when you dig into some of the recent bankruptcies and you dig deeper into what actually happened, what they did. It's just astounding. It's just astounding that these people thought that they can professionally manage money. It's not a professional institutional approach. This is not how you would manage a credit fund, for example. So where does that leave us in terms of hiring? We've been very careful. We've been hiring very slowly because we on purpose didn't want to be in a situation where there's an unforeseen delay and suddenly we need to make some tough decision and restructure half the team because they have nothing to do. So we're doing it very, very slowly. We also want to make sure we do it right and hire the right people. But the fundamentals of the asset class don't change. And crypto is only 10, 12 years old. When you look at equities, it's very, very normal to have bear markets. It's healthy to have bear markets. It's very normal that markets go down for a period of time and then go sideways for a period of time. And as crypto matures, the same will happen for crypto. There will be cycles. The only time I've ever seen a line that goes from the bottom left to the top right-hand corner was Bernie Madoff's fund, and we know what that was all about. So that there are cycles is normal. I think with more regulation, more institutional approaches, and more compliance, more people who understand compliance, this will be good for the industry and attract the right people. So I don't see this change. I don't see that that because we've been correcting for a bit that people question the asset class. Those times are over. It's here to stay.
Excellent. Donald, thank you very much for that. I mean, certainly from our side, yes, well, there has been some slowdown on crypto hiring. We are still seeing a number of opportunities, both across Asia and also from our US and UK offices, that firms are still investing in those compliance programs, building out both their compliance teams and particularly the regulatory relations and regulatory liaison side. To Neville's question that he asked of people trying to bring people closer together and to understand all the differences between those jurisdictions. And so people who have a lot of experience dealing with regulators, often from an institutional background, I think, are in demand from crypto and digital asset firms now to really kind of help them manage the complexities of that international environment and help firms to be able to build their business in the right market. So they are investing in those markets. They're going to be open to regulation and going to be able to provide that scalability in the future. So thank you everyone for joining our webinar today, and thank you very much to both Anu Fansa for Donald Day for their great contribution and answering those questions. There were a couple other questions we didn't get through to ask, so we'll maybe ask them separately offline and follow up with a post about those. But if anyone else would like any further information either around this topic and particularly around hiring, then please do get in touch with any of the team here at the Danos Group. Thank you all, and have a great afternoon and evening or day in the UK.